Welcome back to our Preparing for Retirement podcast. This is the conclusion of our podcast series. We're going to be today reviewing and summarizing what we've learned over the last 10 lessons. For instance, what's going to affect my future retirement? What can I expect from others, my company, and the government? What can I do for myself in retirement? And how can I be responsible for my own success in retirement? You must take responsibility for your retirement. These are things that will be true. You're probably not going to have a pension when you get to retirement. You're probably going to live longer than your parents or grandparents did in retirement. Our government benefits are definitely going to be less. We're going to have to wait longer for them. And you may well find that they're going to cost you more as well. Healthcare costs, we know, are on the rise and are going to continue to rise as we move through retirement. You're going to need to rely more on your own personal savings in retirement than your parents or grandparents ever did. And you're going to need to get predictable returns on those savings. And you can be house rich and cash poor, or you can learn to use the assets that you now own to actually create some wealth. So what about taxes in retirement? If you think taxes will be higher in the future, is postponing tax really a good idea? We looked at this in depth and concluded that it may not be smart to be putting money away in tax-deferred accounts. What about creating an arbitrage? By using the assets that we own, we can write off interest paid and compound interest earned to actually grow and accumulate a tax-free retirement plan. That tax-free private retirement plan we created using life insurance. Unlike traditional life insurance where we're trying to buy the most insurance with the least amount of money, our new Equity Index Universal Life Insurance Plan allowed us to try to buy the least amount of insurance while funding it with the most amount of money we could in the fastest way that we could, while avoiding the modified endowment contract limits and by keeping our corridor as narrow as possible, thereby allowing us to buy the least amount of insurance but funding it as quickly as we can. What about those retirement plans? We saw that if we continued to put money away in IRAs and 401ks, that we were getting tax-favored treatment on the front end, but when we withdrew that money or transferred it to our heirs, we were going to be fully taxed on those dollars. If, on the other hand, we used a non-qualified alternative like the Equity Indexed Universal Life Insurance Plan, we would be taxed on the money that we put into the plan, but it would grow tax-free, you could withdraw it tax-free, and you could transfer it to your heirs tax-free. In addition, if we used the home equity plan, as we outlined in these podcasts, we could actually use money from our IRA account to make our mortgage payments, thereby washing the tax on those dollars, allowing us to have our contributions be tax-favored, as well as accumulation, withdrawal, and transfer. And ultimately, we're the ones that get to decide which one of these plans would be best for us. So does this resonate with you? Does it make sense? By using an interest-only loan, it provides you with a lower monthly payment and the opportunity to take the principal portion and put that money to work for you. By using an Equity Index Universal Life policy, we found that we could have growth in a tax-preferred environment. We could have no downside market risk, but upside market potential. We could be creating tax-free income. There would be a lump sum tax-free cash if a premature death occurred. And we've got a fund that's protected from creditors and lawsuits, but yet is easily accessible by you. It was liquid, it was safe, and we got a great rate of return. And we accomplished all of this without spending a penny more than we were currently spending today. So as you prepare for your own retirement, realize that you're going to need to be responsible for that retirement. That you can use assets that you already own to create wealth, that you can use the tax laws as they exist today to your advantage, that you can truly build wealth, and you can do it without changing your current spending. For more free information, please check us out at our website, www.equitymaximization.com. And we look forward to helping you prepare for your retirement.